Hello friends, it's your man Mr. Solution. So in today's episode we'll be looking at the concept, the greater fool theory. Actually, I was having a discussion with one of my friends, and then in the course of our discussion he asked me if I've heard of the concept, the greater fool theory. I said yes, so he needed some explanation. So I was like, if this guy doesn't know this, what about other traders? What about other investors? Why don't I do a video that will help other persons to actually know that there is a concept in the financial market called the greater fool theory? Okay, so what actually is the greater fool theory? All right, so the greater fool theory states that it is possible to make profit by purchasing assets which may be overpriced and then selling it to another person who can be called the bigger fool, who is willing to pay even a higher price for that asset. So what do I mean by that? Let's say, for instance, a particular asset is overpriced. Let's say it's selling at $50, and then you rush to buy it because you believe people are hyping it and all that. So you decide to buy it with the mindset that some other persons or a person might be willing to buy it at, let's say, $60 or higher. Okay, so you buy it, and then unfortunately, instead of the price to keep increasing, it start falling. So what it now means is that you are now the greater fool. You are now the greater fool because you bought the top. In normal trading, we say the person bought the top. So the person who buys the top is also called the greater fool. All right. So the greater fool theory supports the principle that there will always be a greater fool in the market who will be ready to pay a higher price based on some unjustified valuation for an already overpriced asset. Okay, an asset is already overpriced, so the greater fool believes that if he buys it, there is somebody else that is going to buy it from him at a higher price. So the new estimates might be based on a higher irrational multiple for the asset. All right, so here the investors purchase the asset without any regard to the fundamental quality or underlying principle, but only with irrational beliefs and expectations. Most of the greater fools in the financial market, they buy things, they buy commodities, they buy assets, they buy cryptocurrencies without any underlying fundamental analysis. There is nothing. They're just buying it based on hypes, based on people saying that it's going to increase or whatsoever. Okay, so they rush to buy it because they hope to sell it off at a higher price to another investor who could be the greater fool. Funny. So who might also be hoping to sell the same thing to someone else in future at a higher price. Okay, and the price of the asset is determined by what the market is willing to pay, ignoring the true worth of the asset. All right, that's just the shenanigans. That's just the whole concept of the greater fool theory. Okay, they believe that it doesn't matter the intrinsic and the extrinsic value of this very asset or this very crypto coin. They just rush to buy it, believing that somebody else is going to buy it at a higher price from them. Okay, so overall, the investors are happy to pay too much for an asset just because they believe that a greater fool will be willing to pay more in the future. All right, so let's proceed. So where does this theory end? Like, where does this theory lead us to? Okay, so I don't know if you've played the game called musical chair game. All right, so look at it here. So it's a situation whereby a group of persons are given some chairs. They'll be asked to dance around it. All right, it's I can remember when I was a little boy, I attended a birthday. That was my first time of getting involved in this kind of game. A set of chairs, like 4 chairs or thereabouts, we are set for us, and we over 10 persons. We are dancing around. We are just, they will be telling us to dance and all that. Okay, so in the course of the dancing, they will just turn off the music. They will turn off the music, and then everybody will be scampering to get a place to sit. So anybody who does not get a place to sit is considered a greater fool. They will take the person out. So the thing continues, it keeps on going on until 1 seat is left and 2 persons are left to contend for the remaining 1 seat. So the person who unfortunately couldn't get seated is usually seen as the person that came second. So this is just the concept of the greater fool theory, right? Everybody is jubilating, everybody is happy, and then they are dancing around the chair and all that. And at the end, you see that there are some greater fool, those who will be carried away by the pomp and pageantry, by the fun and every other thing. They'll forget that they're in a contest. So the same thing is also applicable to cryptocurrency trading. We are in a contest. We are fighting to buy the bottom, fighting to sell the top. Anybody who mistakenly goes ahead to buy the top instead of selling the top, the person is considered a greater fool. Okay, so when you run around the chairs, you might be happy thinking that there are enough number of chairs and all you need is just one. So however, everything changes when the music stops and you might not be able to find even a single chair. Here, the irrational expectation that there are enough tools, okay, to go around will lead you into losing the game. So the greater fool theory or the ideology starts failing and causing the crypto market's bubble. Unfortunately, later this always ends up with a speculative bubble burst and eventually leading to rapid depreciation in the price due to sell-off. This thing is quite obtainable, is everywhere. For instance, this particular coin, Fil coin, that is FIL, okay, File coin or Fil coin, I don't know, whichever way you pronounce it, just know that the spelling is FIL, then coin. All right, so we've seen that the very first day it was listed, we saw how the thing was just going up and down. Even till now, it's still going up and down. What happened is that it's trying to determine, market is trying to determine its real value, okay. Market is trying to determine its real value. I was in the market when it reached like $102. I saw it crash down to $40. I saw it go back to $58. What is actually happening is that market is trying to determine its true value. Market is trying to determine its real price, because that's just what is obtainable. So the greater fool is the one that will not buy the top when it's at a high price. He buys it because maybe he has seen how the thing is moving, how the volatility is coming in. They will just rush to go and buy it, and then at the end he dumps on them. He dumps on them because they didn't bother to do their own analysis. They didn't bother to do any fundamental, any technical, or maybe just they were just fascinated by the way it was going up and down. Okay, so those that eventually buys the top, or those that bought the top, so to say, became the greater fool. Now it's around $23, $26, $25 or thereabout last I checked. Okay, so this is just a typical example of what the greater fool theory is all about. Okay, like I said, nonetheless, there will be someone who will be left stuck with the investment when the speculative bubble finally bursts. Okay, this is because when the end approaches, people begin to realize that the price attached to that investment is just unrealistically high, and hence they might not be willing to pay a greater price for that asset. However, the ones who have already purchased that asset at a high price might be stuck with it. Okay, so these people who purchased this coin at a higher price will now be stuck with it. Okay, so they are now the greater fool. All right, so the key point here is to make sure that you are not the greater fool. So let's proceed. Okay, so let's look at a typical example of a greater fool theory where it was exemplified. It happened in the dot-com bubble burst. Okay, the dot-com bubble burst is an example of how the greater fool theory ends. Okay, so the greater fool theory can help to explain how speculative bubbles are formed in different assets. For instance, during the dot-com bubble burst, the prices of every IT companies were high. They were all high, they were all going up, everything was highly inflated. Okay, so the theory supported buying of overvalued stocks in hot market. Like everybody was just buying and buying and buying without regard, because everything was just going, just like what happened in 2007 cryptocurrency. There was no analysis. Something you buy now, in the next 24 hours or less, you see it going as high as 100%, 200%. Okay, so everybody was just buying. There is no analysis and nothing like that. Okay, so the same thing was what happened in the bubble burst. Everybody was just buying all the assets in the IT sector, okay, with an expectation that a greater fool will come along and buy it from them at a higher rate. Okay, so at that time, instead of focusing on trying to find the true or the intrinsic value of the companies, people follow the herd mentality to invest in all the IT companies. People follow the herd mentality because they hear that maybe Microsoft is this, this is this. Everybody was just rushing to buy that the dot-com boost, okay, dot-com bubble burst. All right, okay, so everybody was just investing in anything that had IT. Okay, just like what happened in that 2017, anything that had BTC, we had Bitcoin Black, we had Bitcoin Private, anything that had BTC attached to it, everybody was buying, because you could buy it today, the next day it's giving you 300%, 50%. Those things that happened those period, we are just examples of the greater fool theory we are currently talking about. Okay, so there we are purchasing the stock and simply trying to find a greater fool whom they can sell the stock at a higher price than they themselves paid for it. Okay, however, the end of the dot-com bubble was not so happy, right? It was really not so happy. I wasn't born then, but I remember I've read a lot of articles on the dot-com bubble bust and all that. Okay, many of the investors who planned to sell their overpriced stocks later turned out themselves to be the greater fool. It happened. It might shock you to know that there were some person that bought BTC around 20,000 as at 2017. That was that December or thereabout, or August, that Ember month period when BTC was fastly galloping up, there were people that bought $20,000 believing that it was going to touch maybe 30 or 25 or 50. So those that bought it with the intention of selling it to other persons, they are considered, or rather they were considered the greater fool. All right, so the next thing now is we're just going to look at how to avoid being a greater fool. It's very simple. Okay, so now that we've understood the concept, it's very important to avoid being the greater fool than just knowing what the theory is all about. Okay, anyway, like I said, it's quite simple to avoid being a greater fool, and here is how you can do it. Firstly, do not blindly follow the herd. Okay, before making your investment in any asset, before buying any crypto coin, do your own study and research. Do not follow because of maybe this guru, unquote, this guru that perhaps you believe he knows it or tells you to go and buy, and I rush to go and buy without asking yourself, why is this person telling me this? What is the rationale behind my buying this now, this overpriced level? If this market is overpriced, why should I be buying it? Instead of looking for a place to short it, why should this person be telling me to buy at this rate? So these are things you have to ask yourself. Do not blindly follow the herd, paying higher and higher price without any reason. Okay, so make sure you do your own research. That's number 3. I said DYOR. Make sure you do your own research. Do not just blindly follow anybody because you believe that he knows more than you do. Of course, yeah, it's possible for somebody to know more than you do in the crypto space, either because of the length of time the person has put into it, or the amount of knowledge he or she has consumed, or the experience and all that. But then just believe that. Don't just blindly follow the person because he has a guru tag on him. Maybe he has a verified account on Twitter, or maybe he has a large amount of followers. These things are just extrinsic value. These things are of extrinsic value. You need to consider the intrinsic value. What is the person? Why is this person telling me? Why must I buy this? Why must this person tell me to buy this? All right, so this is the 3 steps I encourage you, my viewers, to make sure that you follow anytime you are about buying an asset, to make sure you don't become the greater fool. Okay, so many people invest in some cryptocurrencies just because its price is going higher and increasing too fast, and although they know that the price of that coin cannot be stable at that inflated price, still they are willing to enter the trade with the expectation to exit soon, making some profits. All right, it happens. As a rule, if you go to the market and you see the coin has gone as high as 20%, you have no reason to buy it. You shouldn't be. If you're buying it, you're gambling. Okay, but mind you, that a coin has gone as high as 20% in a day doesn't mean it cannot still go as high as 40% in that same day. But then you have to play at a level, you have to play a game where your upside is higher than your downside. Like upside in the sense of your profitability, where you know you have a higher chance of being profitable, okay, than a place where you know your chance of losing. So you shouldn't be buying a coin that has gone as high as 60%, 50%, 20% in a day. You should look for those ones that are still coming up, something like 1% or 2%, or even minus 0%, or there are minus 0.1% or lesser. Okay, so these are the methods you can use to make sure that you don't become the greater fool in the market. Okay, make sure you don't become the greater fool. Remember the 3 points I marshaled out. One is that do not blindly follow the herd. Don't buy because everybody's buying. Don't buy because everybody's talking about it. And 2, do not blindly buy without any reason. Okay, and finally, DYOR. You say do your own research. Make sure you do your own research. And then finally, I said make sure the greater fool isn't you. Make sure you are not the greater fool. All right, friends, thank you so much for making out time to watch my video. I encourage any of you who hasn't yet subscribed to please subscribe to my channel. Drop a comment in the comment section, like, share, and follow. You can follow me in any of my social media channels. As a matter of fact, I have a Telegram community where I share my signal. I do coin analysis, technical analysis, look at some coin setups and all that. I share my strategies. I give signals. I'm not charging for anything, at least not for now. Okay, it's just for free, just a way of me giving back to the community, helping people who haven't really understood how the cryptocurrency space works, just trying to share what I know with them so that all of us can grow and blossom. All right, till I come your way again, I remain your man, Mr. Solution.